Deforestation is largely driven by production of commodities, especially agricultural commodities like soy, palm oil, beef, but also timber, pulp and paper, and mining products. So companies that produce, trade, or source such commodities depends on finance for their operations, which may come from investments or loans. And this makes investors and banks potential enablers of deforestation and violation of the human rights of indigenous peoples and other forest-dependent communities. Deforestation creates financial risk for companies and their shareholders and lenders in several ways. Forests provide ecosystem services that businesses depend on but don't currently pay for. And when deforestation causes such services to disappear, it can have a large negative impact on companies and their shareholders. And companies linked to deforestation can also lose market access because of new and stricter regulation on deforestation or reputational damage among consumers. Because businesses depend or need access to capital, the financial sector can play a positive role by requiring companies to protect forests in their operations and supply chains. At the climate summit in Glasgow last year, 30 institutional investors committed to deforestation-free portfolios by 2025. This will no doubt be challenging because forestry commodities are part of thousands of complex supply chains. So investors need to map their portfolios for deforestation risk and decide how best to reduce that risk. Our strategy is to contribute to a change in business practice and induce companies we invest in to stop contributing to deforestation. But some companies that cannot or will not change may have to be excluded from investment. The challenge now is to find good data that lets us identify company links to deforestation and assess whether they are making credible progress. Sustainable finance in relation to forests means shifting financial flows away from activities that contribute to destroying forests and into activities and companies that help provide solutions for protecting forests. Long-term financial profitability depends on the sustainable use of nature and its resources. And while deforestation may be profitable for some companies today, it creates a systemic risk that may cause huge losses for entire sectors and economies.